Hello, dear viewers. I hope you are uh, all right so far. And let's just say I'm Akif Mateen, your host for tonight, and I'm welcoming you all to join our live session on Tripplepips market research and analysis. Now, you can like our Facebook page and also can subscribe to our Telegram channel. The link is in the description. Now the goal of ours is that we kind of like want to share our insights and market analysis to you, and through that, our demand is that you would uh, calculate the predictions and would match it with your own findings, and then enter the market so that it creates an additional filter to your strategy, and for that, losing streak may end, and also for the future you can have an opportunity to escalate your earnings further. So for that for that reason, we are gonna start our live stream today explaining all the market scenarios and our expectation, our preference levels, and how we could uh, you know think about the next week market movements and how we can track and make profits. So let's just get started. So on the very first of our session, we usually discuss what actually our last week analysis was and how it actually performed. So cutting short, we would like to go through that first. So in previous week, we have seen that we have GDP and industrial production news of China, which eventually was kind of like better than previous, value, which is this. Now we had G20 meetings, we had Australian dollars monetary policy meetings, we had CPI news for CAD last week, we had CPI news for pounds last week, which was eventually lower. So, chances of increasing rates for pound is not that much on the plate for now. We had employment news for Australian dollar. We had housing related, data for US dollar on Wednesday last week. So how it actually affected the market, and obviously in our analysis, let's have a look. Like for example, for US 30, last week we have predicted, we have informed that yes, these are the zones through which we are gonna have some prediction that yes, how this is gonna react. So this was this was the previous week, and this was the week before. So let's just say last week, you can find the last week analysis in our live section. So I'm not gonna tell it once again, but this was actually our level, that if it exceeds any H1 or H4 exceeds this level and closes, then it may tend to a 500 points buy. That's what actually we had put an eye on, yes, on the last week for US 30, and yes, it actually did. Like for example, the point was above 34,005, let's just say 80 or 75, and our target was at least on 35,040 levels. And for furthermore, our eye was on that it may touch 35,500. But you know what it did? It broke this level, created H1 or H4 above this line, and for that it actually created a total of 800 points move, whereas our first target has been filled very successfully on 35050 level, and later on it actually boosted a little bit up to 353, let's just say 35343 or 344 level. Now for gold, so for US 30 we can say that yes, we were correct for gold. Let's have a look. For gold, we have informed that for last week that this channel needs to break. Now it actually broke. Now we had informed that if any H1 or H4 candle breaks above this line, which is above 1960, 68 level, or let's just say for Africa 1970 level, Then it has a opportunity to touch 2000 level, which was more than 300 pips for gold. But eventually we had seen that a sudden shift happened on, let's just say, on Thursday because of this news. That's what I can presume. This one and this one too, and especially this one. So when Australian dollar had performed very much well enough, as we can see over here. Uh, so that's why it actually made US dollar a little bit stronger, this news, because here, as we can see, the value is telling us some positivity, but it's been showing positivity according to the forecast value over here. But forecast value isn't just an idea. It's not something that we could rely on 100%. What we can rely on is that about this previous value versus the present value declared. So over here we can see 76.5k employment level, which was actually reduced. So eventually Australian dollar performance was weak. So on the vice versa note, we can say that US dollar was stronger after the news. So that actually been reflected over here, as we can see. So for gold, we need to also have a look on Australian dollar also, and according to US dollar too. So on contrary to that, we can say that this happened. But before that, the market was eventually on the bullish note on the very first of the week. So we can say it partially it was, right, because the pattern we are seeing right now, maybe it may go a little bit down, but the movement it actually did by bringing price from here to here, we are predicting the same movement from here to here too. That means from this zone to the 2000 psychological level too. Now we have to wait for the Monday opening, and also I have to look on the Monday closing too, because that actually matters in a sense. So we will get to that, a little bit later. But firstly, we can have a look to USD JPY too. For USD JPY, it's been kind of like showed us that, yeah, yes, what we talked about last week's box structure on USD JPY, it was true. Like, for the like Monday and Tuesday, it was actually been roaming around in these boxes, and eventually it been hit on Wednesday, and it didn't close. Let's zoom a little bit, and yes, you can see there's no closing over here, right? So as there is no closing on H4, so we just cannot tell that yes, okay, this is a correct pattern to put a buy. But over here in this candle on last Thursday, market actually, I've been told that US dollar got a little bit boost. So yeah, market broke the structure on our expected level was 139.8 level, and from there it actually moved a bullish move of 200 plus pips up to 141.85 levels. So as you can see that uh, 200 pips is kind of like a good move, but our target was kind of bit more like over 330 pips. So we can say we are also partially correct for USD JPY. Okay, for GBP USD, we have informed about the box-like structure and liquidity, shift candles over here. Now, the verdict was that if the price breaks above this level and close any H1 and particularly H4 uh, time frame candle over here, then it could shoot above and on the bullish. But what we see here is the alternate scenario for GBP actually been worked out for the last week. Like the H4 candle closed below this line over here, just right over here. Let me zoom a little bit, just a little bit here and here too. And sorry, this candle, in this particular candle, the price was 1.3015, and from here it actually touched our initial first target of 118 points bearish, which was 1.29062 level, and later on it actually consolidated a little bit and didn't hit our target on the this level. So that's for GBP USD, and we had also a view on odd JPY. We also informed that there had been some box structure over here, and Previously, we have seen that the price rejected, and then it actually broke last week. So uh, our entry may trigger over here, can touch the target one, only 76 pips, but it actually did. And later on, from the buy side, it actually hit over here in this candle, but didn't go that much. But we believe that it may continue in the upcoming week. So that was the our analysis past week and the performance that's been happened. So let's have a look to what will happen on the upcoming week. But before going through that, we're gonna inform you what are the most important news that's gonna come and release in the upcoming week. Let's just say on Monday, on you for the pair for the currency euro, we have French manufacturing and services PMI news. Also, we have German flash and manufacturing and services news. For GBP, we have the similar news too on the same day on Monday. And most importantly, we have EU economic forecast, though it's been showing a little bit low and impact expected. But right now, in this condition, in the geopolitical condition right now we have in the Eurozone, we are actually been thinking of this news as a very impactful news right now, because market may create some new highs, new low, breaks previous supports and resistance with some higher end spikes. That's actually we are expecting on Monday. So that's why I informed a little bit before that yes, we have to look on the Monday movements and the Monday openings and the closings both in a very serious note to know and figure out how the market will behave for the next week. Let's just say for Monday we have also news for US dollar, the similar news. Now on the Tuesday we have consumer confidence news for US dollar. We have Australian dollar CPI news on Wednesday. And also we have Federal Reserve rate in GMT plus 6 time. It's been already Thursday, but it's going to release on Wednesday on the most of the Eastern time frames. So sorry, on the Western time frames. So we can say that on Thursday on GMT plus 6 time we have FOMC rates, and that's the most crucial news of the week, as we can say. Now, on the same day, on Thursday, we have Euro refinancing rate and monetary policy statement for Euro. We have advanced GDP news. Also, we have ECB press conference just some couple of hours after the Federal Reserve Federal funds rate and FOMC statement. And most importantly, the federal funds rate has been telling us that yes, the forecast is that the Fed may increase a little bit, 0.25, which is we can say 25 BPS interest rate on this Thursday. Now on the Friday, we have some good news. I mean, like very impactful news for JPY, as we have monetary policy statement for them as well. We have Canadian GDP and employment GDP news for Canadian dollar, and for Australian US dollar we have core PCE price index and employment cost index. So this is the upcoming important news that's going to come next week. Now we can have look on some of the good and impactful news that we can have for you to put our discussion on. So after pausing in June, the US Federal Reserve is widely expected to hike interest rates again on Wednesday, adopting its most restrictive monetary stance for 22 years despite recent signs of slowing inflation. Now, after 10 consecutive hikes in just over a year, the Fed halted its aggressive campaign of monetary tightening last month to give policymakers more access. Now, in the week since, positive upgrades to economic growth and cooler inflation data have reinforced the likelihood that the Fed's rate setting committee will vote for a quarter percentage point hike on July 25th and 6th. So it may range from between 0.25, 5.25 to 5.5%, and it's the highest level since 2001. That's the most important things to put your mind on, guys, because uh, if the Fed, despite any situation, if they actually wants to put a hike on their interest rates, then I would like to say that it will be the highest, despite it's something not related to 2009 crash or something, but something more than that. And The cooling of the economy is only happening slowly. Bank of America's chief U.S. economist, Mr. Michael Kaplan, been wrote like something like that, and Federal Reserve U.S. plays catch up with the new instant payment systems. We have been informed about the CBDC and all the and digital, coin related issues coming from the Fed. So I guess it will be something good for the U.S. economy and as well as the world economy, unless or until their aggressive stance for many other countries related to dollar actually been reduced. Or else if it continues, then BRICS will have more room to join more international powers to or international you know bodies to collaborate under them under their umbrella, and that will create a negative impact on US dollars. So US dollar needs to act very fast. So that's why to have some of the good idea and some good vibes on the dollar, you know um, in the dollar tide, we can say that yes, this 0.25 points or percentage hike is very much expected. Let's just say uh, inflation in advanced economies, how it's gonna be. So we have seen that in October, Germany had the highest inflation, above 12%, and US was the most one on July 2022. Now, at present, on the June criteria, inflation in advanced economies been reduced. US is in a most reduced position, while we can see UK has still holding kind of like upper inflation closely to 8%. That was above 5% or something. So UK economy lags. There's a report over here. Let's have a look. UK economy lags behind most of the G7. GDP growth from October December 2019 to January to March 2022. So this is the thing that it's actually should keep our mind on, because as the United States, Canada, Italy, and France and Japan both have some positive figures on economic growth, but except United Kingdom and Germany. So we can say after the COVID situation and after the Ukraine-Russia war, this is kind of like a thing. Sorry. And if we can cover up with this story, dollar hits for best week since February. Yes, that's what actually we have been, informed you a little back ago, that the greenback is set for the biggest weekly gain in nearly 5 months, and that's actually I kind of like say that kind of like it's priced in move for the US dollar rate hike. We are expecting when the rate hike news will be published, US dollar will be weak, because in this week it actually been eventually got a little bit stronger uh, because of the expectation it's been showing. So I believe that's the reason the US dollar would react just the opposite when the news releases. Week ahead, bracing for next week earnings and many data. Like in this news, we have actually have a look on many of the markets. So let's hop in. On US, we can say that Federal Reserve is expected to resume raising rates at least for the 25 basis points. That's what actually they are also eyeing on. And Friday, this link has been telling us that how the news on US dollar may impact on eurozone. A 25 basis point rate hike from ECB is almost entirely priced in ahead of the meeting on Thursday. But what comes after is much more than the debate. So we have flash inflation data from Germany, France, and Spain in the upcoming week, and also for UK too. And on UK is very quiet week for the UK, the following one in which inflation was shown to be finally falling, and interest rate expectation have been pared back. Now for the for the China, there is no economic data, but but there are some chance on fiscal stimulus related announcements, and that's what actually we should put our eye on. In Australia, we have flash manufacturing services PMI, and we have quarter two inflation data on Wednesday, and also we have retail sales data coming up. On New Zealand, one key data note to be balance of trade on June out on Monday, where May's trade surplus is being forecasted to reverse to a deficit of minus 1 billion NZ from 46 million NZ. So it actually reverted back from minus 1 to plus 46 million. That means I would like to say it's a not much that much positive or hopeful comeback, but I could we could say that yeah, it's a good thing for New Zealand dollar. For Japan, we have CPI data for Japan to be released on Friday. We have flash manufacturing services PMI on Monday. So that's what actually we are eyeing on. For the energy, the oil market is going to continue to tighten as OPEC delivers on the pledges as China improves business condition despite having cutting short of the production of the oil. So that's how the interest rate, the rates of the oil actually got pumped up. And that's why the key earnings from Shell, Total Energies, Exxon, and Chevron will provide key insights on capex spending and expectation of future drilling. So that's actually we all are eyeing on. The G20 Energy Transition Ministerial Meeting will focus on clean initiatives. Now, let's go for the gold. The gold is poised for third straight week advance in the Wall Street anticipates the Fed could be done with their rate hiking cycle after next week. A strong labor market, however, keeps the risk and more tightening occur to fall. And so the gold isn't quite ready to make a move back above 2000 level. That's what actually they're saying. But if Powell able to signal that it seems they're done tightening, gold may attempt to capture 1988 level with 2000 being a major psychological barrier. So they're telling 2000 is a psychological barrier. We are telling 2000 is a psychological opportunity. So when we see there's a good move for the 2000, we should go on for it. Okay. So this is the news that's gonna you have to put an eye on. Now we have seen that the eurozone, U.S. Economic Surprise Index, City Economic Surprise Index. According to the City Economic Surprise Index, U.S. dollar is in a good position, and we are seeing here another data as a consumer confidence data. So this is the present situation, and this is the expectation. So it's it's just showing that yes, it's better than expectation. Then we can say on Thursday we have ECB news. Okay, this is the report for the jobless claims for US dollar. We have already been eyeing on and discussed about the US news gonna come next week. So let's move on. On Forex Live website, you can also have a look to this news to have a fundamental insights. So let's just get back to the chart. For US 30, as we are eyeing on that, let's just zoom in a little bit. Okay. So for the last week, our first initial, TP was executed, but it doesn't touch this one or more over this level, above levels. So what we are expecting is that for the this week, for the upcoming week, we are seeing some of the tragic downside move, at least from 35232 to 34700 or 650 levels. Now from here, it will actually give some spikes, create some chaos, telling them that yes, US dollar is much stronger than ever before. People will have that yes, okay, US dollar is stronger, so stocks are gonna weaker, so they're gonna put some sell orders over here. And what will happen? It will create some spikes and shoot up to 35500 level, or let's just say more. So how we are gonna denote these levels? Let's check it out. This is for the next week. This could be our level. Sorry. So on the market opening, if this level touches and closes above this level, Then our I next level to be considered, or let's just say our targeted price could be closely near to 3600 level, this level. So we have a 500 points projection for US 30 if any H1 and H4 closes above 35500 level, and the target is 36000 level. Now on the alternate side, we're going to look on this level if the price closes below this level. This one, which is, we can say, 34300. Then it has a chance to put a 500 points minimum bearish up to 33660 level, which is more than 500, 632 points. So this movement is we are expecting for the downside move, and this movement we're expecting for upside move. So any H1 or H4 closing above these levels, we have to put the entry accordingly. Now for the gold, you know I would like to say the zones remain the same. Like, any bearish move below this level, which is 1910, it may turns out up to 1850 level. But what actually we are been eyeing on, that it may go this level, have some zigzag spikes over this level, and when it actually breaks and opens above 2000 level, then our expectation for gold is that it may go by up to 2055, or let's just say 50 level, which is nearly above 450 pips for gold. Now let's move for USD JPY. Is on the verdict to touch this level on the next week, let's just say over here. But we have to remember that if it closes any H1 or H4, especially H4 closes above 143.25 level, then the market may tend it to go at least 300 pips above on 146.5 level. If not, then we would wait for this coming back to this level, which is 137.4, and we can see that here there is another liquidity level over here previously, and which is nearly above 350 points from 137.4. Then our bearish target could be 133.85. Now for GBP USD, as it's been on the sell trend last week, so we can say that it may continue a little bit over here, then it will go some sharp moves. So our levels are this, like if the price, okay, let's just have a zoom out and find the correct levels. Yeah, this is the level. Yeah, and for buy, I guess, yeah, it's all right now. Okay, let's just discuss now. For here on on GBP USD, if the price closes below 1.26579 level, then it's likely to have a downside of 150 points up to 1.25 level. That's what actually we can say on the bearish side. Now for the bullish side uh, assumption, we can say that if the price exceeds 1.303 level, there is a chance that it will go at least 140 pips above, which is 1.316 level, to break these highs, previous week's highs. So that's all for GBP pairs and gold. Let's just say we will come back, uh, you know, on the same day, Sunday next week, and we'll discuss our market discussions, including the news and the probable positions. So what we can summarize for the next week is that we have to look eye on the FOMC, because a lot of spikes it's gonna happen, a lot of stop loss is gonna happen. So we have to make sure that we have to execute in the correct points. So that's all for now. I guess you all have a very nice week ahead. So stay with us, like our Facebook page, subscribe to our YouTube channel, and obviously don't forget to join our Telegram channel. So have a nice day. Bye.